Now, the New York Stock Exchange, which is the biggest of its kind in the world, yesterday suspended trading for 15 minutes as a result of the effects of coronavirus on the odds and prospects. Now, what does the future hold? Are we edging closer to another global economic meltdown? We're going to spend some time looking at all of this with Udolu, a professional Forex trader with over 13 years of continuous trading experience in the global capital markets. He's a certified global market trainer from Market Trader Academy, New York, as well as the CEO of FX Management Limited. Welcome to the program. Good morning.
Good morning.
Good morning.
Thank you for joining us.
Thank you so much, and happy to be here.
Happy to have you. Now, all the stocks up and down. It's a global crisis right now. So I'll start with the most obvious question. How long do we expect this to go on for? How long do we expect stocks to be down for?
If you're looking at it from the major, happening right now in the capital market, it's something that has not ever been envisaged, that it's what's going to be taking place. The market structure actually, is built around, major fundamentals element, that drives, the capital markets, from the inflation aspect of an economy, from employment data, from consumer price, index value, from trade balance, and so on. The coronavirus has nothing in relation with most of these, sectors or factors that has, given, clear leverage to how the market grows. So it's more like, a global, all-head channel towards how to, curve out, the whole, issues around and trying to solve, the major problems. So it is not fundamentally, tied to, the clearer factors that drives the market. So for how long, technically, it's not something that anybody in the world knows about, but every, economy, every, government out there is putting on measures on how to really, solve the issue so that the market can resume back, its major forces. Looking at what happened, in the capital markets, on Thursday, immediately, the New York section opening, which happens to be, the biggest, trading, section in the world. I felt a huge major, market pullback. At that point, there was no fundamental base to actually, drive the market, which ought to, be a clearer market, a structure line. So, in order to avoid, major financial, crash, the market actually, benchmark on its lower, low volume, line of what, we were to expect, back in 2018 when we had a global, financial crash. Mind you, we're not really suffering from, financial crash. Right now, what we're suffering from is the human, element. It's really, affecting the human race. So all major measures right now has been put more or less like on a stale, on hold, so that this, area can be contained. What is the U.S. economy? The U.S. economy controls 80% of the global market space, giving, other economies 20% share of the market to be able to, have a stale balance. But because of the measure of the coronavirus, it has created a tilt measure down into the American, economy and trying as much as possible to sustain the money market, because the money market is deeply affected. And something needs to happen, because if we have the two biggest, sector in the world, which is the medical, sector, and the liquidity market, which is, the currency market, being affected, it's going to cause a total global chaos. And on that note, that is more like a high edge of, bust in the global economy, which happened to this moment, not having to have a better solution to. So we just hope and pray that solution comes well firm enough so that the market can fully resume its structure. If not, it's creating a global downtrend.
Oh dear, fingers crossed then.
Fingers crossed.
What is your reaction to that strongly worded press statement released by the Central Bank of Nigeria yesterday, which really threatened to come down hard on unscrupulous Forex traders, of which you are clearly not one, but I do want your take on it. And they include with sanctions, including for economic sabotage. Although you do have some analysts who say that the CBN is merely trying to delay the inevitable, that with dwindling reserves and a drastically lower oil price, that devaluation is inevitable. What are your thoughts on those two things?
Now, my thought on that, the Forex market is structured, basically on three perspective, elements, the technical aspect, the fundamental, and, the sentimental aspect. So the statement like that from the CBN, creates what we call the sentimental drive in the market, trying to, curve out what are people really, doing in terms of how do we now grow, the currency space, and how do we now, discourage, what we call the capital flight, so as to avoid, people trying to channel out, funds, and probably, depleting the strength, of the naira, within the Nigerian, market space. So having these, measures in place is more like, trying to create schemes, to solidify, the naira in the Nigerian economy space, so as to stand against, most of these, wrong measures coming in now to affect, the naira.
Okay.
And the inevitability or otherwise?
Well, the clear point is we just have to create and model with the monetary norm or the monetary value that is being projected in there, so that we can be able to really safeguard and hold the economy rightly.
Thank you for that. Now, let's speak about the Nigeria Stock Exchange as well, which has taken a hit, and all the effects around that. Exports have stalled as well. And I want to know what options investors really have at this point, because staying on the CBN as well, let's not forget that they also stop people from buying treasury bills to encourage people to look more into the capital market, the stock market to be particular. So what options do investors have at this point that the Nigerian Stock Exchange or the Nigerian Stock Exchange has taken a complete fall?
Now, right now, the world is really, trying to create a balance. So, and most investors are looking for safe havens. Most, from the international perspective, you look at people running around gold. We look at people running around crude oil. But you can see the major heat that is actually, hitting across board. So, safe haven at the moment is not really what we have at our disposal. But right now, trying to create more a balance tide, so that we can be able to have a clear trade. Looking at the Nigerian economy, we depend mostly, almost about, 8.35 billion of our dependent in terms of of our import, flow comes from China. And most of our players within the Nigerian sector has, most of their partners, in these related countries, across. So that is where we're going to see, the major heat, in the economy. And for some time now, we've not been able to, import, goods and services into the Nigerian economy. And on that note, it creates what we call, the demand and supply and scarcity chain. So when we have this scarcity, now we have more volume naira in the system. The price of, commodities goes up and creating less value for the naira. And on that note, inflation sets in. And once inflation sets in, it becomes more like, a huge drawback. So investment point of view right now, people are not really looking at that angle right now, because there is no clear measure yet, because we're trying to stay afloat. We're trying to create a balance as against the major, market pullback or market, arrow that is going to be coming in around. So the leverage point we're having this moment now is to see how best, we're containing most of, these major impacts, that is presently happening, in the global market against our own, zone. So most shares in the Nigerian economy right now is presently, facing a downtrend, and we're trying to see how best we can contain that.
So this is the point now. I'm going to borrow a leaf from you and talk about options. Mm-hmm. We now have a situation where our budget was benchmarked at $57, we all know, and we're not going to see that for quite a while. The government has set up a committee to look into the effects and what should be done, budget review, what have you. But what monetary or fiscal interventions at this point can possibly mend broken supply chains? What can possibly stop the spread of the virus, which is leading to sluggish demand now? Lower rates, no matter what, like you've said, right now it's not the time. Even if you lower the rates, where will the consumers get the confidence to go and borrow right now? Mm-hmm. What is really going to happen to the economy? And what can the government do at this point? What are the options that they have?
Right now, this is where the government needs to set in by creating, infrastructures to creating a massive production on product and need of the nation at this moment. Now, we're no longer looking at, importation into the system. And for me, for us as a nation, it's creating more like an economy opportunity, because this is a time where, various sectors can be harnessed, various industries can be given birth to from the smaller scale. The bigger heat is actually, affecting the bigger industry players right now. So creating a smaller scale, market edge and opportunity, it can get to balance, the tide. So the advice now is for the government to create infrastructures to increase massive in-house and home-based, production to be able to balance, the trade, pending when these, issues have a headway. But at the moment, nobody can tell and nobody can really, really give an expression. So we create room now for more, work, more production, and more, infrastructures, put in place on the local scene.
Okay. Let me get your take on something. It's a tweet that I saw this morning by a Twitter user called Tire_A, and he goes, obvious to some, but stocks and other investments are now on sale. If you have free cash, go shopping soon. True? False? What's your take?
Well, depends on the angle he's looking at it from. If he's looking at it from the capital international market point of view, well, it's a two-way, channel market, unlike, the bonds, market where the price is only as good as, somebody, willing to buy it at that, particular, given price. But the stock and shares market is a two-way pattern. You sell when the market is going short, you buy when the market is going long. So what we're presently seeing now, it's more like a better opportunity, to go short based on the market volatility that is happening right now.
So we should be going shopping.
We should be going shopping, but very careful shopping anyway.
Now, do you subscribe to this notion that the central bank should merge the several foreign exchange rates that we have? Will that ease pressure on the Naira?
Merging, because now we're looking at it from a different economy point of view, different market volume. Imagine that it's more like, opening doors for a single currency kind of, window base, on the merged ground. Because we need to be able to quantify the volume between economy A, economy B, and economy C, so that we can have, a clear measure. If they fail, okay, fine, solidifying the Naira, it's basically just going to create a benchmark, or more or less like, staling what happens in a low productive economy, as against, a high productive economy. Then in creating that measure it creates more like, a currency vault that can solidify, the Naira from the market economy space.
Cool. And let's move on as well to cryptocurrency and how that's been affected. Bitcoin, Ethereum, etc. What has been the effect on that?
Now, Bitcoin, Ethereum, and all, these are not fundamentally, base currencies because the global market space, Nigeria, America, Britain, has tied the growth of, her national wealth, which is the currency, around, fundamentals, factors that drives it. But cryptocurrency absolutely has no fundamental base, but rather sentimentally, driven, based on the market hype, in the sentimental hype, in particular region, jurisdiction, as against another. You can see clearly what is happening now. There is no, fundamental structure channeled towards crypto, and that is why we're having a major fall in crypto right now. Every other, fundamental is structured in the area of staling the money market. The crypto is not a money market. So fundamentals are not really structured around that to still, hold that market. That's why we're seeing a drastic, massive fall in that, sector.
Well, I want to share a quote with you from Aliko Dangote at the Going for Growth 2.0 CBN roundtable held 2 days ago. He said, there are two ways to diversify the economy, which can be driven through agriculture and manufacturing. However, to achieve inclusive growth, there must either be backward integration or import substitution. What are your takes on that quote?
Look at the two terms here. Agriculture, which talks about, production. For what? Export. So once we have, boost measures put in place, structured in place, Nigeria is going to be able to have a lot of what? Wealth bank in the agricultural, framework. Whilst this economy on the out edge is having, major challenge at the moment, we're able to store in our banks, we're able to store in, our room field, so that to avoid inflation. And I believe that is geared towards the inflation bit. Once inflation sets in, we're going to have major problem. We might necessarily not suffer from the health or medical implication of the coronavirus, but we definitely might have a major, pullback from the economic impact of what that can result to.
Thank you so much for joining us this morning.